In this video, I'm going to show you how I scalp pips out of the market every single day using simple strategies. If you're new to this channel, my name is John, and this is Supermarket FX. Here we talk about ways to simplify your trading and free you from the belief that trading can't be done. Let's get into it right now. What's going on, everybody? This is simply just the no BS to trading. I don't like indicators on my chart. Even though there may be times you may see something, I've been looking at volume profile, but other than that, normally my charts are bare. I use a simple approach for entering the market. And if you follow this channel long enough, you're going to be able to see that this can be done for you too. Now, what we're looking at here is the EURUSD on the 15-minute chart. Everything I do when I mark things up is on the 15, and I take entry on the 1 minute. So when you're looking at this, we need to mark up our areas. So there's so many different ways to trading. So what do you do? So on this channel, I do voids, which I talk about in other videos. Highs and lows, so that could be the wicks. It can also be the bodies. And I also look at supply and demand areas as well. So when we're looking at this, now this is an example. We're looking at potential opportunities here, and you can see how I have everything marked up. And why did I mark them up this way? So you can see how price left the area, and I've marked off an area of demand where price could potentially come into and change direction, and you can see that it did. Now that doesn't mean that there's an entry there. This just means that there's an opportunity for you. And again, we've marked up the areas, and you get the idea. You can see that it's come through here back and forth. Marked off the highs and the lows, supply and demand areas, voids. So now what we can do is we can drop down to the 1 minute, so we can just take a closer look at this and see what we're up against. Because like I've said, just because it comes into the area, it may not give you an opportunity that you're comfortable with getting into. So when we start with this, you can see our area was marked off and price came back into the area, and so it comes into this area, and here. Now, what you could have done is, if you would have gotten in on this trade, now I wouldn't have gotten in on this candle. This wasn't a big enough signal for me. Now, you might have been comfortable with this, but I wouldn't have. I would have waited for this other candle to close, or just a few seconds before it closed, and I would have targeted the high, but oftentimes I'll manage the trade too. Like there's things that I'll do. I might get out of the trade early. I might not want to hold on to the trade that long. I may be comfortable with just getting a 1 to 2 out of this. But sometimes I'll also move my stop loss to break even and take partials once it goes a certain distance. And that can be different every time, depending on the distance of my stop loss. Often I don't want it too close when I move my stop loss, because I want to give price enough room to breathe so it doesn't come back out and stop me out and then end up hitting my target. So you could see this was a 5.27 risk to reward. If you would have been targeting the high there, you could have even been targeting the high up here. And you'll notice that often when I talk about this, I'm targeting the body high, not the wick high. So, and if you would have been doing that, the risk to reward would have been 6.22, which isn't bad considering this was a 40-minute trade. So as we go through here, take a look at some more areas that we had marked off. So it was marked off here. So we're waiting for price to come back to there. Marked off here. I can't remember if this one was a potential spot. So we can see with this one here, price comes back up into the area that we had marked off. And this is one of the patterns that I like taking because we see a strong push up into the area, signs of exhaustion, followed by an engulfing pattern. And if you would have gotten in on this trade, you would have targeted the low. Well, actually, you could have targeted any low that you wanted along the way here. But if you're just trying to take a short scalp, you could see that that was a 3.24 for a risk to reward. But potentially, you could have aimed for a lot more. It completely depends on your strategy that you want to use. Now, you can see that we had area marked off. Here, price finally came into this one area that we had marked off. Now, when we're looking at this, this might not be a pattern that you would get in on a trade, but this is an engulfing pattern after it did touch the area, came right into it. So you could have gotten in on this trade, even though it's not one of the best patterns yet. You have to decide if this is one of the ones that you want to do. And you have to keep track of the ones that you do. So documenting everything is important. So if you see this one here, now, you would have, if you were going for a long run on this one, you would have had your stop loss just below, or you could have given it a little more if you want. I'm usually just below the low and would have been targeting the high. And you, on this one here, we can see that it didn't reach. Well, it eventually did end up reaching. This trade actually would have worked out. Now, if we take a look, so not every trade's going to be quick on this. So you can see with this one here, this one was 5 hours and 8 minutes. And this was still within the day, so you wouldn't have had to worry about any kind of overlap. So you wouldn't, unless there was some news event going on during this time, you should have been fine. I wouldn't have caught this trade myself because, Well, actually, I might have gotten in on it, but I would have been asleep for most of this. And then when we take a look here, actually, what was the risk to reward on this one? 9.25. So not bad. Not bad. Here we go again. We had our area marked off. Now it's a large area, and I'm not targeting any specific point on this. Just looking for it to come into the area. And that it did. And when it did that, you can see what happened here. Strong push into the area. Signs of exhaustion. An engulfing pattern. Would have gotten in on the trade. And with this one, whoops. Okay, with this one here, where are we? You would have, your stop loss would have been just above, and your take profit would have been at the low. And this one actually played out nice and quick, just the way we like it. So this was a 19-minute trade, and the risk to reward was 3.89. And you can see again, price came into this area that it already came into before, I believe. Or no, did it already come into it? Almost did back there. Shot through, broke past it, and then came right back into the area. So potentially you could have tried scalping something out of this, but this isn't a trade I would have taken. And it was just a little too choppy for me at this point. And then this is another area that we had marked off. And here we go. Price comes into the void. Signs of exhaustion. An engulfing pattern. Now you could have gotten in on this candle, but I don't know if that would have been good enough for me. I would have probably been targeting the next candle just for a better confirmation. Now you could have targeted the high on this one, or you could have been targeting your next area that you had marked off for supply. So, well, if we target that, it's a 1.77, which is still fantastic. And that trade itself would have taken 41 minutes. And then you could see there was another trade tapped in right here. But this one, it isn't as nice as the other patterns that we've seen. But again, it came in and touched the area, stalled out, an engulfing pattern right here. Stop loss above the wick. And if you could have been targeting the low here, you could have been targeting the low there. So you have to decide what you want to scalp out of the market. Now we can see if we follow it down that I don't think this one would have worked out. No. So if you were taking partials, moving your stop loss to break even, you still would have made something off of this. But if you would have been targeting the low here, your trade would have worked out fine. And this happens over and over. Now what I do, I was originally watching multiple pairs, and I decided to cut that back because taking on too many pairs, especially when you're scalping the market, you're going to get so many opportunities in a day. Now the problem with that is there's going to be days where you're going to get hit with a string of losses. And the problem with that is you're fine when it's a couple pairs, but when you have several pairs, you're not going to be able to handle taking in that many losses if they all suffer losses that day, because it can happen. And if you're doing a prop firm challenge, how are you going to be able to handle that? Your risk is going to be too much, unless your lot size is so small that you can handle that. But most people will be trading a decent lot size, trying to pass a challenge. So if you get hit with 6, 7, 8 losses in a row, are you going to give up trading? Now, I find when you're trading 2 pairs, which is what I'm doing right now, I get opportunities every day. Every day I get multiple opportunities all through the week. So with that, it works fine, but I've noticed even then, I can get 3, 4 losses in a row. So imagine if you were taking on 3, 4, 5, 6, 7, 8 pairs, how many losses you can actually suffer at that time. So master just a few pairs, and if that isn't enough for you, then you can add in another one, but don't overload yourself. Not if you're scalping the market. There's no need for it. If you're trading the same way that I'm showing on this channel, you don't need more than 2 pairs. For myself anyways, I'm comfortable with 2. Everything's working much smoother for me now that I've brought it down to 2 pairs. So try that for yourself and see if that helps you a little bit, because I noticed that was one of the problems for me. I was watching too much, and you basically couldn't walk away from the screen because it was going off so much, and the amount of losses you take in a row, it's more than I want to take, especially when I'm planning to do a prop firm challenge. So try that out and let me know if that works better for you. But again, I want to show you here. Price came in again to the area. Now, this is a win or a loss depending on where your stop loss was placed. So you can see here just above. Now, if you would have done that, you might have been fine, depending on what broker you're with. Some brokers have very wide spreads, and some are close to 0, depending on who you choose. And you would have been targeting the low. And again, there we go, 2.92. Now, if you would have gotten stopped out, you could have looking for another entry to get in on this. And you could have tried getting in a second time. Again, stop loss just above. And targeting the same area. So you can see price came back down into an area that we had marked. So this happens over and over again. What makes this so powerful is the fact that you're targeting specific areas. So the candle patterns mean absolutely nothing unless you're choosing a very specific area. So when you do that, it will give you the opportunity to properly analyze what you're doing wrong. So make sure you know what type of candle patterns that you're doing. So take a closer look at your wins and your losses and see if you can figure out what you're doing wrong and what you're doing right. Take a look at your, if you're just targeting supply and demand areas, has the area been touched already? Do you find that you can take a second trade off of it, or you end up losing most of your trades when you try doing that? So the closer you look at these type of things, the better you're going to get at this. You can see again how price came up into the area, and that would have been a possible entry. But then looks like you would have been stopped out of that. So you would have lost that trade. This was another opportunity. Would have lost that one as well. And again, this one, if you would have kept trying, the third entry would have worked out. And that was a risky reward to 5.06. So you don't want to get discouraged on this as well. This is why reducing the amount of pairs that you watch, because I've had it where I've gone through the trading day and I've lost 3 trades, taken a break even, maybe just a small loss on that after commissions. And then start of the new trading day, and that's for me, that's after 5 p.m. So sometime before bed, I see a trading opportunity and I get into it, where part of me is saying, just go to bed and start a new day tomorrow. I don't want any more losses. But you can't think like that, because if you do that, you may miss the trade that you needed to get. And sure enough, oftentimes when I do this and take a trade after several losses, I end up making up for my losses. So just keep following your strategy. Whenever your trading opportunity presents itself, you take the trade and analyze everything that you do. And in time, you're going to get better at this. And if you have any questions about this, just leave me a comment. And until next time, bye for now.